Welcome to this training. In this training or in this video, we are going to consider what is Forex, the history of money, and why you should know the history of money as it relates to Forex. What is Forex trading? The word Forex is a combination of two words, for and X, which stands for foreign exchange. It means exchanging one currency with another. Let's assume you want to leave your country to another country. You must acquire that currency or the currency of the country you are going to visit. The process of you exchanging your own home currency to get that of the currency or that of the currency of the country you are traveling to is foreign exchange. But in this case, we are talking of Forex trading. You want to be a trader. That means your job is buying and selling of money, buying and selling of currencies. It's as simple as that. In this video, we have to look at what the power of history, why the history of money in forex trading. Now, the power of history. No one can take your belongings because you know the history. In the part of the world or the area I'm coming from, once there is disputes, especially land disputes, the winner must prove that he owns the land via the history. Your ability to tell the history of the land in dispute to the point where you are fighting for it, that gives you an edge or a winning power over your counterpart. So once you know the history, nobody will take away your belongings from you. So if you know the history of money, that means you obviously make money. Now, what is history? Please take note of this. History is a lens through which we understand the present and shape the future. It reveals patterns, teaches lessons, and empowers us to avoid past mistakes. It's as simple as this. This is why you need the history of forex trading, the history of money, the history of what you are about to go in. Yes, by knowing where you are coming from, you will gain the wisdom to make better decisions and the strength to build more informed and prosperous future. That is the power of history. It can never be neglected. Therefore, why the history of money in forex trading? Anyway, understanding the history of money is crucial for anyone entering the trading zone because it teaches you or reveals how currencies have evolved and why they fluctuate today. Remember, what you want to make is money. Therefore, you must know brief history of money. If you don't know the brief history, how it gets to this point, it will be very, very difficult for you to make money as a forex trader. Yes, when you know the history of money, you will know how the global events, why money is what it is today. Yes, how it evolved from where it was to where it is today. That is what I want you to know in this video. Yes, because the history will help you shaping your ability to predict the market. Yes, manage risk and navigate the complex world of international finance with confidence. The forex trading you want to go is international marketing. So you must understand the trend. You must understand why this will happen. Has it happened before? That is what will help you make informed decision. Yes, the history will guide you to avoid mistakes that most traders do. Here, a brief history, or it's a brief history of money, barter, and gold. Yes, the early stage of life, there was exchange of goods for goods. If you need A and I have B, we exchange it for one another. But at a time, the barter system became a problem because you may have what I have, I need, and you may, yes, You may have what I need, and I don't have what you want. Or how do we quantify the measurement of what you need as against what I have? These are the problems that makes the barter system inefficient. Yes. So to get this thing done, the gold era was introduced. Gold became a medium of exchange. So the value, the intrinsic value, the durability, and the divisibility made it ideal for commodity trading. Yes, in this case, some portion of gold can be linked to a particular size of whatever you want to. It could be measured, and that became the foundation of early economies. Paper money. How did we get to paper money? From gold to paper money. Now, as the economy grows, as activities of man grows, there are need for bigger transactions. That means you need a bigger portion of gold to get something for yourself. It is heavy. It accommodates a lot of space. So in that case, what the economists did was to attach the value of gold to a paper money for easy transaction. Hope you are getting it. For easy transaction. So the gold became, because of the problem of carriage, being bulky, now gold era has been dropped. Rather, the value of gold is linked to paper money, so making transaction very easy. It allows exchange of goods easily among buyers and sellers. Over time, paper currency became more accepted, and government began issuing it as a primary form of legal tender. Remember, this paper money now, the value is tied to the gold standard. Now, it is time to place a standard. Now, the gold standard was established as a system where the value of the country's currency was directly linked to a fixed amount of gold. Yes, a fixed amount of gold that the currency of a country can purchase or is assumed to have. That is what the value of that currency is linked to. It becomes a gold standard. And this meant that paper money could be exchanged for a specific quantity of gold, ensuring stability in currency value and limiting inflation. Countries followed this system through much of the 19th and early 20th century. Yes. Then, what happened after then? Bretton Woods. After the World War, to ease or to have a common ground, there was an agreement, 1944, to stabilize the international currency. In that case, US dollar was directly linked to gold. The value of US dollar was linked directly to gold, while other currencies are pegged to dollar. But things did not work out as it planned. Remember, the dollar now becomes the reserve currency for every country. Yes, most countries in the world have their foreign reserve in dollar just to have a financial stability around the world. And that placed a large demand on US gold reserve. Then, end of the gold standard. What happens? In 1971, there was a unilateral agreement to end the linking of gold to the dollar, and that ends the Bretton Woods agreement or system that was initially done. In this case now, the dollar became free. Yes, the end of that gold standard is called Nixon shock. In that case, the dollar start floating. Only the value of dollar now is based on demand and supply. The gold becomes free of dollar. Now the currency start floating. That is just how the money or the currencies has evolved over time from barter to gold, gold linked to dollar, later detached from dollar, and dollar became an entity of its own. And that gave rise to what we call fiat money. It has no intrinsic value. You know, when gold was tied to money, the value of money is tied to the value of gold. But now it is the value of money is backed by government policies. And this has become the global practice in economics. If there's nothing you will take away from this video, listen to me attentively. I and other successful forex traders make money through the ability to read past price action to determine the future position of the currency. That means for you to read past action, that is history. You must learn how to read the price action, past price action, and that will definitely tell you where the currency will be. So thank you for watching. As you progress with this foundation of money, you have known money, you can say little about money. Then it is time to go to start fighting or fetching for the money. Thank you for watching once more.